Thanks for your time this afternoon, Brian. I'm glad to be able to sit down with you and talk about the outlook on the economy for 2017. And I think for starters, you just finished up a term on the FDIC Community Advisory Council, and meeting in Washington D.C. With other peers and bankers from various communities. What was the biggest takeaway for you in that experience?
And it was actually the Federal Reserve Board, not FDIC.
Okay.
So yeah.
Okay.
But first of all, it was a tremendous honor to be selected, and I think they had for 15 slots. I think they had 1,300 people that had shown interest, and I was just felt so fortunate to be selected and have at least 3 meetings again. I drew the short straw, so my term is over. This was the inaugural board. But just a couple of things. Number one, how much interest that the Federal Reserve Board does have on community issues. And the CAC was really to reflect how monetary policy and regulatory policy impacts low to moderate income people and neighborhoods. And there's just a genuine interest there. Lots of questions, lots of comments. So we think of them in maybe an ivory tower in Washington D.C. and maybe displaced from what their policy impacts local neighborhoods. But they really just had a sincere interest in how everyone is doing, not just the wealthiest, but how everyone is doing.
So a concerted effort to tap into that then.
Right.
What do you feel like you brought back to the Ozarks or the Community Foundation, something tangible from a learning experience there in D.C.?
Well, I've been, as I shared with the board, a Fed groupie for decades. I mean, I love monetary economics in college and have always been a Fed watcher, I guess. And so just being able to meet with folks and sit down and have lunch with the chair of the Federal Reserve Board was such an honor. The other thing is I learned so much about areas that I don't see so much affecting us, but are especially affecting metro areas and on the coast, and the FinTech issues, just innovation, excuse me, that I know will come here, but it's really sort of they're disrupting traditional banking in many of those markets, and I know that'll be coming to the Midwest before too long too.
Yeah,
I'm so sorry.
No, you're fine. You want to get some water?
I think I'm okay. I think I got the cough out. Yeah.
The financial technology sector has made some strides in recent years. You're right, more so on the coast, but have you seen anything in the Ozarks that you can point to and say, well, this is FinTech at work, and this is some local people in the middle of it?
Well, it's Federal Reserve studies showed about 20% of small business lending last year was online.
Okay.
And that's some disintermediation from the banking system.
Yeah.
And when you think of it, the ease of access, where you're not having to bring in tax returns, and I used to be a commercial lender, and I know the questions asked, and just to go online and put in, information, gosh, it makes it real easy, but it also makes it sometimes too easy because they look at cash flow, not at profit. So as long as you have cash receipts and you just turn over your credit card receipts 5% every day, go back to pay the loan, and that sometimes the best thing a lender could do is say no. And you don't get that online as long as you have cash receipts. And what we learned especially in Southern California, there are businesses that are stacking those. So they'll borrow X amount from one lender, go online, borrow X amount, and so before you know it, 20% of your daily receipts are going to repay a loan. And the lender is assured of getting as long as there's cash sales, but you're not being able to reinvest in the business. And so there's some great innovation there. There's some great benefits, but there's also some things when you're not looking at repayment resources and looking at long-term profitability that can also be a hindrance to a business and lead to its demise.
Do you think it will continue to disrupt the community banking system? Or is there something that community banks can do to level that out?
Well, here's kind of what we were seeing in bigger markets is now banks are getting into that.
Okay.
And so they're starting to buy some of these smaller lenders and buy that technology. But the other issue there is the online lenders aren't regulated like banks are, so it's not a level playing field. So banks have to show repayment and all of that. These online lenders are subject to CFPB, the Consumer Protection Finance Protection Bureau, but they're way behind in trying to regulate. There's a lot of these lenders out there. So I think it'll continue to be disruptive until the regulation can catch up.
Yeah.